Alright everyone, what is going on? Welcome back to the channel. Today, we're diving into a head-to-head comparison of two major cryptocurrencies, Bitcoin and XRP. Now, I get asked about these two all the time. People want to know which one I should be looking at, which one has more potential, which one is safer. And honestly, those are all fantastic questions because these aren't just random digital coins. They represent fundamentally different approaches to the world of cryptocurrency and blockchain technology. Whether you're looking for a store of value, utility, speed, decentralization, or investment return potential, we've got you covered in this deep dive. We're going to break down everything you absolutely need to know, from their core purposes and how they actually work, to how fast they can move money and what it costs. We'll also tackle the big questions around who's in control, how widely they're being adopted, and of course the million-dollar question, or maybe the multi-million-dollar question, what the investment outlook is for both of these crypto giants. This isn't just about picking a winner, it's about understanding the strengths and weaknesses of each, so you can make informed decisions. Because let's be real, the crypto space can be a minefield if you don't do your homework. Bitcoin is the OG, the one that started it all, often called digital gold. Then you have XRP, which is laser-focused on the banking and financial sector, promising to revolutionize how money moves across borders. They're both big players, but they're playing very different games. So, grab a coffee, maybe a 20-cent iced coffee if you're really trying to save, and let's get into the nitty-gritty of Bitcoin versus XRP. It's going to be a good one. Alright, so first up, let's talk about the fundamental purpose and use case for Bitcoin and XRP, because this is where they really start to diverge. And it's super important to understand this foundation. Bitcoin, as many of you know, is often referred to as digital gold. Its primary use case, and what most people value it for, is as a store of value. Think of it like this. It was designed from the ground up to be a decentralized, peer-to-peer electronic cash system. But over time, its narrative has really solidified around being an alternative to traditional assets like gold. It's meant to be scarce, durable, and crucially censorship-resistant, meaning no single entity can easily control or stop transactions. This is a huge part of its appeal for people looking for an asset outside the traditional financial system. Now, when you look at Bitcoin's design, the whole idea of decentralization is key. There's no CEO of Bitcoin, no central office you can call up. It operates on a global network of computers, and changes to its protocol require widespread consensus. This makes it incredibly resilient. And then there's the supply. Bitcoin has a fixed supply capped at 21 million coins. That's it. No more can ever be created, which is a fundamental aspect of its digital gold comparison. This scarcity is a core tenet of its value proposition, designed to protect against inflation. Unlike fiat currencies where governments can just print more money whenever they feel like it. This predictability in supply is a massive draw for long-term holders. On the flip side, you have XRP, which was built with a completely different mission in mind. XRP, and the company most closely associated with it, Ripple Labs, is aimed squarely at the financial industry, specifically to facilitate fast and cheap cross-border payments. Think about sending money internationally right now. It can be slow, it can be expensive, and it involves a lot of intermediaries. XRP is designed to streamline this process, offering banks and financial institutions a way to move value across the globe in seconds, for a tiny fraction of the cost. Its primary utility is to act as a bridge currency, making it easier to convert one currency to another quickly and efficiently. So it's less about being digital gold for the masses and more about being a high-speed rail for financial transactions between institutions. And unlike Bitcoin's mining process, XRP was pre-mined, meaning all 100 billion XRP tokens were created at its inception, with a significant portion managed and periodically released by Ripple Labs, which is a very different model. Okay, let's shift gears and talk about something that directly impacts users' transaction speed and fees. This is another area where Bitcoin and XRP are worlds apart, and it really highlights their different design philosophies. For Bitcoin, the block time, that's how long it takes to confirm a new block of transactions, is roughly 10 minutes. This was a deliberate design choice to ensure security and decentralization. Because of this and the block size limit, Bitcoin can handle around, let's say, 3 to 7 transactions per second, or TPS. Now, for its primary use case as a store of value, or for large, infrequent transactions, this might be perfectly acceptable. You're not typically buying your daily coffee with gold bullion, right? However, this relatively low throughput means that when the Bitcoin network gets really busy, when a lot of people are trying to make transactions at the same time, things can slow down, and fees can go up. And I mean really go up. We've seen periods where Bitcoin transaction fees have been pretty substantial, sometimes costing tens of dollars or even more for a single transaction to be prioritized. For smaller, everyday payments, this obviously isn't ideal. Again, it reinforces the digital gold narrative. You wouldn't mind paying a bit more to securely move a large amount of value, but for microtransactions, it's a different story. There are solutions like the Lightning Network being developed to address this, but the base layer operates at this pace. Then you look at XRP, and it's like stepping into a completely different dimension in terms of speed and cost. XRP boasts a transaction settlement time of just 3 to 5 seconds. That's incredibly fast, and it can handle a much higher volume of transactions, typically around 1,500 transactions per second, with the potential to scale even higher according to Ripple. This kind of speed is essential for its target market financial institutions that need to move money quickly and reliably. And the fees? We're talking fractions of a cent. Seriously, the cost to send an XRP transaction is minuscule, almost negligible. This combination of high speed and low cost makes it incredibly attractive for the use case of cross-border payments and remittances, where traditional systems are often bogged down by delays and high fees. It's built for volume and efficiency. Chapter 3. Who's really pulling the strings? Decentralization versus centralization. Now this is a big one, and often a point of heated debate in the crypto community. Decentralization and control. When we talk about Bitcoin, its decentralization is arguably one of its most defining and valuable characteristics. As I mentioned earlier, there's no central authority governing Bitcoin. Its network is maintained by thousands of nodes and miners distributed all around the world. Governance, meaning how changes to the Bitcoin protocol are made, is a community-driven process. It requires broad consensus among developers, miners, and users, which can be slow and sometimes contentious. But it ensures that no single entity can unilaterally dictate the direction of Bitcoin. This also makes it highly censorship-resistant. It's incredibly difficult for any government or organization to shut down Bitcoin or prevent transactions. This commitment to decentralization is fundamental to Bitcoin's ethos. It's designed to be trustless, meaning you don't have to trust any intermediary, just the code and the network. The miners validate transactions and secure the network through proof of work. And in return, they are rewarded with new Bitcoin and transaction fees. This incentive mechanism keeps the network running and secure without a central coordinator. It's this robust, leaderless structure that many believe gives Bitcoin its long-term resilience and its ability to function as a truly global, apolitical store of value. It's a system designed to be resistant to control and manipulation by any single party, which is a powerful concept. Then we turn to XRP, and the picture looks quite different. XRP has faced significant criticism over the years regarding its level of centralization, particularly concerning the role of Ripple Labs. While the XRP ledger itself is decentralized in the sense that it's maintained by a network of independent validators, Ripple Labs historically played a very significant role in its development. Ripple Labs continues to hold a substantial amount of the total XRP supply and actively works to promote its adoption within the financial industry. This has led many to argue that XRP is not as decentralized as cryptocurrencies like Bitcoin. The company's influence over the ecosystem and the token supply is a persistent concern for some investors and crypto purists who prioritize maximum decentralization. Furthermore, one of the most contentious points is the fact that Ripple, or more accurately the validators on the XRP ledger, have the technical capability, in certain circumstances, to freeze XRP held in accounts. This is designed as a feature to comply with regulatory requirements and combat illicit activities, which might be seen as a positive by financial institutions. However, for those who value the censorship resistance and immutability found in Bitcoin, this ability to freeze funds is a major red flag, and a clear departure from the decentralized ideal. It introduces an element of trust and potential control that Bitcoin actively seeks to eliminate, highlighting a fundamental philosophical difference in their approach to digital assets and control. Chapter 4. Making waves or just ripples? Adoption, ecosystem, and the eye of regulators. Alright, let's talk about adoption and the overall ecosystem, because a cryptocurrency can have the best technology in the world, but if nobody's using it, well, it doesn't mean much, does it? Bitcoin, being the first mover and the most well-known cryptocurrency, enjoys massive global recognition. It's practically synonymous with crypto for a large portion of the population. Its digital gold narrative has gained significant traction, not just with retail investors but increasingly with institutional players as well. This widespread recognition translates into very high liquidity and market depth. You can buy and sell Bitcoin pretty much anywhere, on countless exchanges, and in large volumes without drastically affecting the price. This makes it a relatively mature asset in the crypto space. From a regulatory standpoint, Bitcoin has generally faced less direct, targeted pressure compared to some other cryptocurrencies, though it's certainly not flying under the radar. Governments and regulatory bodies worldwide are still figuring out how to approach it, but its decentralized nature makes it a difficult target for outright bans or heavy-handed control in many jurisdictions. It's more often viewed through the lens of an asset or commodity. This relatively clearer, or perhaps less contentious, regulatory standing, for now, has helped pave the way for products like Bitcoin ETFs in various countries, further legitimizing it as an investable asset class and opening doors for more mainstream adoption. The ecosystem around Bitcoin is vast, encompassing miners, exchanges, wallet providers, payment processors, and a growing number of businesses accepting it. Now let's look at XRP. Its adoption strategy is very different, as it's primarily targeted at banks and financial institutions for cross-border payments. Ripple Labs has been actively working for years to partner with these institutions to use XRP and its associated technologies like on-demand liquidity, ODL. They've seen some successes with a number of banks and payment providers exploring or using XRP for international settlements. However, XRP's journey has been significantly impacted by regulatory scrutiny, most notably the lawsuit filed by the U.S. Securities and Exchange Commission, SEC, against Ripple Labs, alleging that XRP was an unregistered security. While there have been some favorable rulings for Ripple recently, the legal battle cast a long shadow over XRP's adoption, particularly in the U.S., and created a lot of uncertainty. Despite these regulatory headwinds, XRP still maintains high liquidity, though generally less than Bitcoin. It's available on many major exchanges, but the SEC lawsuit did lead to some delistings or trading suspensions, which impacted its accessibility for a period. The ecosystem for XRP is more concentrated around financial services and enterprise solutions. So, while Bitcoin's adoption is broad and grassroots, driven by individual users and investors, XRP's adoption is more top-down, focused on institutional partnerships. The recent positive developments in the SEC case are certainly helping to improve sentiment and potentially reopen doors for wider institutional use. But the regulatory risk has historically been a more prominent factor for XRP compared to Bitcoin. Chapter 5. The Million-Dollar Question: Bitcoin versus XRP as an investment, risks and rewards. Okay, this is the part many of you have probably been waiting for, the investment outlook for Bitcoin versus XRP. Now before I say anything else, let me be crystal clear. And you guys know I always say this: all cryptocurrency investments are highly volatile and carry significant risk. Prices can swing wildly, and you should never invest more than you're willing to lose. Seriously, do your own research. With that disclaimer out of the way, let's look at how these two stack up from an investment perspective, because they present very different risk-reward profiles. Bitcoin is often seen as a long-term store of value, that digital gold we keep talking about, in an increasingly digital world. For investors, Bitcoin's appeal often lies in its established track record, relative to other cryptos, its scarcity, and its growing institutional adoption. We're seeing major companies adding Bitcoin to their balance sheets, and the launch of Bitcoin spot ETFs in the US has been a game changer, making it much easier for traditional investors and institutions to get exposure. This institutional interest is a powerful driver and suggests a maturing asset class. The regulatory risk, while still present for all of crypto, is generally perceived as lower for Bitcoin compared to many altcoins, partly due to its decentralization and longer history. So for many, Bitcoin represents a foundational, somewhat more conservative, if you can even use that word in crypto, holding in a diversified crypto portfolio. XRP, on the other hand, is often viewed as a higher risk, potentially higher reward utility play. Its value proposition as an investment is deeply tied to its potential to be widely adopted by financial institutions for cross-border payments. If XRP and Ripple's technology achieve widespread use in the multi-trillion-dollar global payments market, the upside could be substantial. However, this potential comes with greater risks. The aforementioned SEC lawsuit, even with recent positive developments for Ripple, highlighted the significant regulatory hurdles and uncertainties that can impact XRP's price and adoption. Ripple Labs' significant holdings of XRP and its influence over the ecosystem also remain a concern for some investors, as it introduces a centralized element of risk. Institutional interest in XRP has been more niche, primarily concentrated within the banking and financial payments sector and somewhat hampered by the regulatory uncertainty in key markets like the US. While a favorable resolution to its legal challenges could unlock further institutional adoption and a potential price appreciation, the investment case for XRP carries a different set of variables than Bitcoin. It's less about being digital gold and more about betting on the success of a specific technology and company in disrupting a massive traditional industry. So, investors need to weigh the potential for high utility-driven returns against the regulatory and centralization-related risks. Outrow the verdict: Bitcoin or XRP, and what I'm doing. So after all that, the big question remains: Bitcoin or XRP, which one is actually better? And the truth is, as you've probably gathered, it really depends on what you're looking for and what your specific goals are. There's no single best for everyone. Bitcoin clearly demonstrates its strength as a store of value, benefiting from its unparalleled decentralization, robust security, and growing global adoption as digital gold. It's the established leader, the one with the longest track record and the broadest acceptance, particularly as a hedge against inflation and a non-sovereign asset. On the other hand, XRP excels in areas like transaction efficiency, speed, and low cost, and has a very specific utility focus on revolutionizing financial infrastructure for cross-border payments. It's designed for a different purpose, serving a different market. However, this utility comes with considerations around its more centralized nature compared to Bitcoin, and it has navigated and continues to navigate a more complex regulatory landscape, particularly with the SEC situation, although that has seen some positive turns. These factors introduce a different risk profile. Ultimately, if you're looking to build a diversified crypto portfolio, there's a strong argument to be made that holding both can make strategic sense depending on your risk tolerance and investment thesis. You might consider Bitcoin as your hard money core, your foundational digital asset, and XRP as a high upside utility play, betting on its potential to capture a share of the massive global payments market. As always, do your own thorough research, understand the risks involved, and never invest more than you can comfortably afford to lose. Thanks so much for watching. I really appreciate you guys spending your time here. Don't forget to smash that like button for the YouTube algorithm, subscribe if you haven't already, and hit that little bell icon so you don't miss out on more crypto insights and financial breakdowns.